So we are happy to be here, and we are happy also that you take the opportunity to get as much information as possible, because the only way I know, and your parents would have told you, there's only way you can move in terms of your life and your standard of living. One is education, and then you must use that education to make sure that you can earn a honest living. So the Jamaica Stock Exchange, it's strange that we have representative here from the Bank of Jamaica, because the Jamaica Stock Exchange was actually found in a location at the Bank of Jamaica in 1968. And therefore, our regulators now, who are the FSC, is also here. So you see, we are moving hand in hand as we continue to ensure that we can provide information for Jamaicans to get a better understanding of the stock market. So, moving right ahead, I think Bergerman has mentioned it, as well as David, in terms of the stock exchange. Our performances over the last 3 years has saw us being the best performing stock exchange in the world in 2015. And when I say the world, I mean the world, not just the Caribbean or Jamaica, I mean the world. So all those stock markets across the world, the New York Stock Exchange, the London Stock Exchange, and all those others, we have outperformed all of those stock exchange, and I'll show you how that happened as I go along. So David has mentioned it as well, that we are regulated by the FSC, and that is critical because we want to ensure that investors are safe and feel comfortable that their investments are protected as it relates to your hard-earned money going into an organization that manages the companies that are listed on the exchange. We have what is called a compensation fund that is used in just in the event that any of our brokers goes bankrupt. The investors are able to recoup some of their money. So what is the stock market? I heard Charles Garden Market, I heard Falmouth Market. What do they sell in those markets? Anybody can tell me? Goods, food, yes. The stock market is the same. But the principle of a market, yeah, is that you bring buyers and sellers together, right? So you as a buyer goes into the market with the farmers and you buy. So the stock market is no different. The only thing that the stock market does, or that what we have as our goods, are the companies that are listed on the exchange. Tracy, you have given out all... Tracy, you have issued up... Everybody who have a sheet of paper, yes? Now, if you look on the column that says J dollars market, those are the goods. Those companies that you see on that side are the goods on our market. Just like the Charles Garden market, you would see the yam and banana and the Irish potato. Right, those companies that are there, those are our Irish potato and banana and pepper in a different form. So when you go to the Charles Garden market and you buy those, when you come to the stock market, what you're doing, you're actually buying shares in these companies. So the stock market provides that opportunity. So as I said before, it brings buyers and sellers together to ownership of any of those companies. So you're part owner. When you own shares in those companies, you're part owner of any of those companies. And the value that you have, anybody can name me one of the companies that is on the paper? Carreras. So if you own shares in Carreras, you now own a value. What is the Carreras price? Look in the column that says close price or closing price. And look at Carreras and tell me what's the price. $9.41. Is that sure? That's the price? Closing price, Carreras, $9.41. So what it is saying is that the value that you have for that share of Carreras is $9.41, right? And therefore, that happens with all the other companies that you see on the sheet that you have in your hand. So what do these companies want with your money when you buy the shares and you give them your hard-earned money? They are going to do a number of things. First, every business has what is called debt. And when that happens, it prevents or retards the company in terms of how they can grow. So what they do with some of your money is to pay off the debt. Yes, that's what they do. Not only that, but they're looking to go into new markets as well, so they can earn additional income that you as a shareholder, the company becomes more profitable, so you can share in their profit. And of course, the fact that you are now the shareholder of those shares, what happened to you when the company makes more money and the price goes up? You now start to create wealth for yourself. Right? So this is how the market works in its simple form. So since 2008, and that's, and let's say up to last year, which would be 2018, the stock exchange has raised over $75 billion for companies. All those companies that you have seen on that paper who have came on the market in recent times, since 2008, the stock exchange has assisted those companies to raise over $75 billion. So it's not a loan that they are taking on. So we have two types of shares on the market: preference shares and ordinary shares. The good thing about it is that as an investor, you can own both of these shares on the market. Now, with the ordinary shares, you will receive dividends if it's declared. It's not a guarantee that you receive dividends when the company makes a profit. But for the preference shares, you're guaranteed a dividend. If you look on the sheet of paper that you have in your hand, look on the companies that you see a percentage sign at the end. You would see companies like JMMB, JPS. You see a percentage sign at the end. For those companies, those are the preference shares. I named two, JMMB and JPS. Anybody can name me another? Anybody can name me another company that you see the name, and at the end of the name, there's a percentage sign? Sagicor Bank? Any other? So what this is saying, if you buy any of those shares with the percentage at the end, you're guaranteed a dividend. And what is a dividend? A dividend is the after-tax profit that these companies make and paid back to you as a shareholder. Because remember, we started out and saying, once you own the share, you're also a part owner of the company. So usually, a company or anybody, when you start in a business, you want to borrow money. And these are some of the institutions that we would usually borrow from. But when you borrow, what you have to do? Pay it back. And with interest. Yes. So that means you have to use that money and make more than the interest in order to survive, true? Yeah, because if you don't, you're going to have to find that money somewhere else. Right? So for businesses that are looking to raise capital, what do? They offer shares to you to invest in public, for you now to buy shares in this company. So what they will do is simply issue what is called an initial public offering. It simply means they're offering the shares to the public for the first time. So we have a lot of them in recent times. So when you hear of an IPO of a particular company is being offered, it is important that you say to you find a broker and say to the broker, I want to be in it early. Because usually that's the time when the price is the lowest. And when you come in at low, you want to ensure that when the company starts to make money and the price goes up, you start to make more money. Right? So these companies, as I said earlier, would use some of those funds to pay off the debt, go into new markets. Anybody know about Lasco Manufacturing? What's a new drink they have on the market? They have come out with a new drink about 2 years ago. iCool. Yes. It is after they have listed that they have developed this new product, because they raise funds and allow them to do market research and find new products, and it is selling. It's around the place. Yes. So they are making more money. And if they're doing that and they're making more money, what happens to you as a shareholder? Your profit becomes better, right? So that is how the cycle works in its true sense. So, as I said earlier, the JSC has raised funds for a number of companies over the past, especially 8 years or 10 years. So we have 80 companies on the market. So that list that you have in your hand, there are 80 companies on it. But they are divided into different groups. So we have what is called the main market, right? There are 38 ordinary shares for the main market and 16 preference shares. Remember, we said we have ordinary and preference shares on the market. So what we call those are securities. So we have 54 securities on the main market, but 41 companies. Because a company, you remember, you look at JMMB and you see preference shares. Look if you see JMMB again and it doesn't have any percentage sign at the end. That means it also has ordinary shares. Right? So it has both. So even though it's one company, it would have been classified as having two securities on the market. So we have the junior market, which is 38 companies that is on the junior market, and the same breakdown in terms of 38 ordinary shares and 2 preference. We also have US dollar market. So for persons who want to invest in what they call hard currency, you can buy shares on the Jamaica Stock Exchange that has a US dollar value. And of course, we also have a bond market. And for the more sophisticated investors, we have an online trading platform that you can stay home and do it yourself or at your office. But first, you would need to do what? You can't come to the stock exchange and buy shares because we don't interact face-to-face with investors. What you need? Anybody can tell me? A broker, name me one. Barita, name me 2. JMMB, name me 3. I will leave Burgerman for you ask the rest. So, but here's the list. And I will take it off very quickly. So, Burger, you with me? If you see a company there that you don't know the name, let me know. Or you have never heard of them. You have to take short and no, so if you're writing, when I take them off and the question is asked, don't write the full name, write the abbreviated version of it. So the big question is, how do I start investing? Like everything else, you have the Gargamel show the other night, and I know that the cost wasn't cheap or inexpensive, as we would say. So persons make sacrifice. Anything that you want, you have to make a sacrifice. True? Are you aiming for that? So you have to now decide, do we buy the Brazilian euro or we buy the... Should I go there, ladies? Or no? Let me say to the men, do we need to buy the England Clarks or we need to buy the other? You know what I mean? So we have to make a sacrifice. School fee to be paid, you know that you have to make a sacrifice. So that's generally what is the best way to start. Don't wait on the lump sum. It rarely comes, and when it comes, boy, money never mind of its own. Because although you plan for it, it's a plan for something else. So generally, again, one of the best things to do is to start small. Start what you can manage to invest. Remember I say, if you get the lump sum, good. But if it don't come, talk to one of the brokers, and I'm sure they will work with your manageable amount that you have. You want to buy over time. So look on the stock again. Somebody name me one of the companies. We mentioned Carreras, right? So if you should buy Carreras today or yesterday or Monday, you will be buying it at the price at $9.41. Now, if 5 years down the road, you think it will remain at $9.41? No. More than likely, and based on history, that price will grow. Yeah, but if you buy it again, let's say next year, you will be buying it at a different price. So when you buy it at different prices, you want to make sure that every time that you're in the market, you're getting, so your $9.41, when it goes up to $10, you would have made something on it, even though you're buying it at $10. So your $9.41 would have started make a profit for you already. So buy over time. What news, what information comes on television on Monday to Friday that during prime time? Anybody can tell me? Business day, business report. And you see anything on the stock market on it? Yes. And that time you turn to the Indian soap opera and you got it. Yeah. No, watch it. That is where you get the information free of cost. Yes. No, but you don't understand it every time you get up, and leave it. True? If you don't go to school and you say, me can't bother with school, you're not going to learn. So you have to start somewhere. So the broker is your best friend. The broker is your best friend. They are paid to do the research. They are paid to provide quality information for you. Because guess what? When you make money, they make. Yes. So it's a win-win situation. So don't think they won't give you bad advice for you to not make money. So they are paid. You continue to do your 9 to 5. All you need is a phone call. And we have many ways in which to communicate nowadays. So WhatsApp it them and do all these sort of things. So get the information. Each broker also have on their website research information. So you don't have to worry about doing all of these things. It is done for you already and packaged, right? The BOJ is here, and they are running an ad about the economy and stability in the marketplace. And someone asked me earlier, what do you think about the stock market for the rest of the year? And I said, well, look, and tell me if I'm wrong. The economy is relatively stable. We heard the budget recently. Interest rate is going down. NHT interest is going down. Yeah? There are a number of things that are happening where that is concerned. The dollar is relatively stable as well. Cool. Employment is up. There's a lot of construction going on. I don't know. Them digging up the road in Montego Bay? Eh? No. Not yet. Soon. But a lot of construction work is going on. And if a construction work is going on, this is it. If construction work is going on, look on the paper, don't tell me, but look on the paper, which company you think would be benefiting from construction work that is going on. And I'll leave that one with you. So look at the environment, what is happening around you. See how you can make money. Cement, well, I'm not saying, you see, you're sitting on the front, you're bright. So these are some of the things that you have to look at. So when you talk about not understanding, it is right in front of your eyes. People using the same information that you say you don't understand and making money. So look at the environment in terms of, and there, if you look at a list again, you will see that there are a number of companies in different sectors. We have financial, we have manufacturing, we have pharmaceutical, we have small business companies, microfinancing companies. So we have a wide range. Entertainment, tourism, real estate. So, you ever hear real estate I go down? Oh, any company on the paper is in real estate? I'll leave that one with you again. So, it speaks about diversifying what you have. So if you have companies, you buy companies in the financial sector, real estate sector, manufacturing sector. You have 3 sectors already, all doing well. So that consists in terms of your diversification. Ownership, as I mentioned, that once you buy shares, you are part owner. So these companies, you have a say in terms of certain things that can be done in the company. The capital gain is the critical part. Where my careers ladies, hold up your hand. Yes. So this is how the capital gain works. So you buy the stock at a particular price. That stock price goes up. That is where your capital gain comes in. Your buying price compared to where the price is at a particular time. So even though you will have gained that in terms of capital, in terms of appreciation of the stock price, you're not actually having the cash in hand until you sell. Right? And of course, dividend. I mentioned it earlier that dividend is after-tax profit that is paid to you. So let's say, for instance, the same Carreras paid $1 for dividend. And Burgerman, find out that lady that have the little boy name for me.
Two.
Kemoy. So Kemoy, you would have bought Carreras on Friday. And Carreras paid a dividend of $1, but you have 10,000 shares of Carreras. You will receive a dividend of that in terms of your units times the dividend price, and you still own the share? Yes. That's how it go.
Yes.
You see? So it is working for you even though you are doing nothing relatively nothing at all. So your money is working for you. And anybody ever hear money tired? Money go up and leave? And what money love do? Produce more. When you have more, it does a producer. There's no board control on money. So it's no mystery, right? So the index is where the stock exchange was measured in terms of the #1 performing stock exchange in the world. And an index is a group of the companies that are listed on the form that you have, on the sheet that you have. So the movement of our index has increased more than any other stock exchange in the world in 2018, from January to the second week in December. And that is why we were declared the best performing stock exchange in the world. So you would have heard on the television the winners and losers, not true? All right. So this is the 101 stock exchange lesson. So a particular stock, hello, my friend, tell me what's the closing price for Carreras?
$9.41.
$9.41. There's a column beside it that says change. Tell me what you see in the change column.
Close.
0.06.
0.06. So it's a positive 0.06?
Yes.
So that is simply saying that Carreras went up by 6 cents at the close of trade yesterday.
Oh, okay.
So now that it will be classified as a loser. Now look in the change column and see if you see any negative change, any stock with negative change, and tell me which one.
Caribbean Producers.
And what's the negative change?
Negative 0.25.
0.25. 25. So that is simply saying that stock went down by 0.25 at the end of the day.
Okay.
And that would be classified as a loser. So when you see it on the television, that's simply what it means. The stock opens at X.
Hold on. Backtrack. You said Carreras were the positive.
Yes.
The closing, when she closed the figure. Go back over the Carreras.
All right.
Because I think you said the positive sign was a loser.
No. So,
yeah, man.
Okay.
So backtrack. Let's backtrack.
Okay. So if Carreras was up by 6 cents, that means it's classified as a winner.
Right.
So which was the other one?
So it gained 6 cents. Caribbean Producers
went down by?
No, Caribbean Producers was minus 0.25.
0.25. So it went down by 25%.
25,
right. So that would now be classified as a loser. So when you hear the news and they say the winners of the evenings are so and so, that means the price went down by that particular amount for the day. Okay. So if Jamaica Caribbean Producers goes up by 1 cent tomorrow, the next trade day, it's a winner.
Okay.
So this is a simple formula you must use. It opens at X, it closes at X plus, it's a winner. It opens at X, it closes at X minus, it's a loser. It opens at X and closes at X, it's traded firm. Simple? Understand now? You see? You must go to school here. Don't be absent. Anybody know what this man's face look like? Oh, you can't see it. Oh, Lord.
Bill Gates.
And I want you to read on March 13, 1986. The company, remember we talk about the IPO, the company offering their shares for the first time in their initial public offering. It went up by, it opened at $21, it closed at 28. It's a winner or loser based on what we just did. By how much?
It's a winner by $7.
Right, so winner by $7. And look what happened thereafter with Microsoft employees. it raised, in terms of the price, 4 billionaires and an estimated 12,000 millionaires of Microsoft employees by just a $7 movement in the price. We do have companies here that persons does the same. This one you need to move the chair for me.
That was for
Push it back this way. So I'll do the top ones, since you can see those clearly. Now, Burrito Investment, had you bought Burrito Investment at the start of the year, right? I mean, 611%. I know Mr. Geddes will tell you that if it's too good to be true, but it is true. 611%. And he's regulating the market, so you'll know it's true. Look at Supreme Ventures, 282%. It started in January 2018 at 51 cents. And if somebody give you 51 cents, you know, the local red money, when I use them again, Bank of Jamaica will phase them out. Those coins that you don't want to save anymore, Supreme Ventures were the value of some of those coins. And look what it happened. So if you had used $10,000 and buy the 51 cents, do the math and tell me how much money you'd have at the end of 2018, just on Supreme Ventures alone. Palace Amusement, open at $560, close at $1,450. Kingston Wharf, you remember we talk about the logistic hub and all of those things and people, yeah, you know what I mean? So there are companies that are on the exchange that are giving significant returns on your investment. And again, you don't have to wait on the brinks. You don't have to wait on the bonus. You don't have to wait, what I said, you don't have to wait on the gratuity. Squeeze something there, son, squeeze something there. So just like when you want to do should I go there? No, don't go there. That's it for me, thank you.